Drowning in bills and apps? You're not broken. The system is overwhelming by design. Minimalist principle in finance brings fewer choices, clearer focus, and more room to actually live. Here are 5 science-backed principles to simplify money and build lasting strength. Each is grounded in data and proven in daily life, not theory, but real practice. Let's start with the first step. Cut the clutter in your financial life. Many people juggle 6 bank accounts, 3 credit cards, 2 brokers. It's exhausting. Studies show too many choices paralyze decision-making, especially about money. Minimalist finance means keeping only essential accounts, checking, savings, 1 investment account. Close or freeze unused accounts to cut mental clutter and fraud risk. Simplify your budget. No 20 categories, just 3 still works. Essentials, joy, and future. Too many apps create confusion. 1 tracking app is enough. When decisions are simple, you'll stick to them longer. By cut 7 accounts down to 3, use saving hours monthly. Minimalism here isn't deprivation. It's about reducing friction and regaining focus. Principle 1 takeaway. Fewer buckets, fewer headaches, stronger decisions. Principle 2, automate the essentials. Late fees aren't from lack of money. Most of them come from forgetfulness. Autopay bills and credit cards. Your stress drops and credit score rises. Research shows defaults change behavior and automatic savings outperform manual intention. Set payday auto transfer to savings before you even see the money. Commit future raises to savings can double results without hurting today. By using this simple method, you can raise savings from 3% to 11%. Autopay without a buffer risks overdraft. Keep 6 months' expenses in checking. Principle 2 takeaway. If it's automated, it's consistent. Principle 3, spend intentionally. Impulse buys drain more wealth than fees or inflation combined. Set a simple rule. Essentials, joy, future. No micromanaging categories. Psychologists call it mental accounting. Naming money changes how you use it. Pay yourself first. Auto-save 10 to 20% before spending. Use a 24-hour rule for non-essentials. Most impulses vanish overnight. Delete saved cards from shopping apps. It creates friction against impulse. You can cut your monthly spending 25% by using a cooling-off rule. Principle 3 takeaway. Intentional spending is liberation, not restriction. Principle 4. Kill high-cost debt. Debt with high interest is the opposite of freedom. Here are 2 proven methods, avalanche and snowball. Avalanche saves most interest. The target is pay off highest rate first. Snowball builds motivation. Pay smallest balance first for quick wins. Research shows avalanche is cheapest, but snowball keeps people engaged. Here is the strategy. Start with snowball for momentum. Switch to avalanche after confidence builds. Always autopay minimums to protect credit score and avoid fees. By combining these principles, you can pay off your debt with ease. Here is Principle 4 takeaway. Kill expensive debt strategically, not randomly. Principle 5. Invest simply. Most active funds underperform the market in long term. Here is how index funds win. Low cost, diversified, long-term growth. Just 1 fund can be enough. Global index plus optional bonds. Automate monthly investments and ignore daily noise. Spiva reports prove past winners rarely stay winners. In this Principle 5, simplicity compounds wealth better than complexity. But you have to remember, minimalist finance will fail without an emergency fund. Target 1 month bare essentials, then 3, then 6. This buffer protects your automation, investments, and peace of mind. 5 principles. Simplify, automate, spend intentionally, kill debt, invest simply. Minimalist money isn't about less, it's about freedom to live more.